Hey everyone, welcome to this explainer. Today we are tearing down the curtain on traditional finance. We're going to break down exactly how Wall Street's old school research system is, well, fundamentally rigged against you, the individual investor. But more importantly, we're exploring a highly disruptive solution proposed by a platform called IanFV that aims to level the playing field once and for all. Let's get right into it.
Let's validate a shared and honestly incredibly painful frustration right off the bat. Have you ever bought a stock based on some highly touted Wall Street target price only to watch it just absolutely plummet? Yeah, we've all been there. And the realization that hits you afterward is brutal. Those target prices often feel less like expert analysis and way more like a carefully laid trap.
Our sources pull absolutely no punches here. Giving a static target number without a dynamic time constraint, that isn't rigorous research. It's really just marketing dressed up as complex math. Think about it. A target price means literally nothing if they don't tell you whether it'll take 6 months or 5 years to hit it. As the source material bluntly puts it, it's statistical hooliganism. Wild, right?
And here is the kicker. Massive academic backtesting reveals a pretty shocking truth. Wall Street's 12-month target prices only hit an accuracy rate of about 30 to 40%. That is a dismal track record. Actually, they systematically overestimate targets by roughly 25%. These big institutions aren't predicting the future at all. They're routinely reacting to the present. Raising targets when a stock is already up, lowering them when it drops, all while charging massive premiums for the privilege.
So this highlights the absolute absurdity of the current setup. Institutions love selling you a 5-year fantasy. Our sources call these sci-fi visions of perpetual growth. Why? Well, because a 5-year prediction can't be disproven today. But retail reality, it's drastically different. The average individual investor holds a stock for only about 10 months. So you are literally being sold a 5-year map for a 10-month journey. It's a complete mismatch.
So that brings us to Section 1, a new independent vision, shattering the information hegemony.
Now enter a new platform called IanFV. Their vision? AI-driven, independent, for everyone. And this isn't just some catchy marketing slogan. It's their actual fundamental core code. It's the absolute bedrock they've built on to directly combat that extreme unfairness we just talked about in financial data distribution.
See, the creators of IanFV recognize that traditional research really just serves its sponsors. You've got sell-side firms acting like biased cheerleaders trying to win banking fees, buy-side firms talking up stocks they already own just to lure in retail buyers. Even so-called independent research often bows to whoever's paying the bills. This leaves everyday retail investors trapped behind $10,000 subscription walls, left to pick through delayed, biased, secondhand waste. IanFV was specifically built to bypass that entire toxic loop.
Moving on to Section 2, 3 revolutionary core products built for the real market. To systematically dismantle that unfair advantage, IanFV developed an arsenal of 3 specific, battle-tested outputs aimed squarely at the serious individual investor. We're looking at valuation reports, industry research reports, and deep dive reports. Let's break down exactly how these replace those old static linear illusions with actionable dynamic intelligence.
First up, valuation reports. IanFV completely ditches that isolated dead number target price. Instead, they calculate a time-stamped probability distribution. They factor in all sorts of things, macroeconomic variables, volatility, historical data, to give you a dynamic range. It's not a blind guess. It's a mathematically constrained probability curve that tells you what a company is actually worth under specific conditions over a specific timeline.
Then, when it comes to industry reports, they flat out refuse to paint those 5-year sci-fi scenarios we mentioned earlier. Instead, they focus strictly on the next 6 to 12 months of survival and revenue. They slice macro industries all the way down into hyper-granular subsectors. Why? To analyze real, head-to-head rivalries and hard cash flows within your actual 10-month investment horizon.
And for their deep dives, the contrast is honestly stark. Traditional deep dives kind of manufacture dreams, right? They just constantly raise the ceiling on growth. Well, IanFV deep dives do the exact opposite. They execute extreme cash flow stress tests to calculate exactly how hard the floor is. They want to know when a company's economic moat will crack under serious pressure. They aren't trying to sell you on the upside, they rigorously audit the downside.
Which leads us to Section 3, the unfair tech advantage beyond generic AI wrappers.
Now, you might be wondering, how do they actually accomplish this level of precision? And why can't I just ask a generic AI like ChatGPT to write these reports for me? Well, the answer lies in their proprietary technology. IanFV's uncopyable tech moat relies on an integrated local architecture. It is absolutely not just a generic AI wrapper. They use a system of highly calibrated self-trained small language models, or SLMs, paired with private domain-specific knowledge graphs, and it's all running locally on-premise.
And to crush AI hallucinations, which, let's face it, are deadly in finance, they use a rigorous three-step process. They ingest massive, highly complex paid data streams. Then they filter that data exclusively through those private knowledge graphs. Finally, they force the AI to rely on strict, human-like logical workflows. They use the AI for its reasoning engine, not its memory. And that guarantees professional, deterministic, and fully auditable results every single time.
And here is the true game changer from a business perspective. Zero token compute cost. Since their architecture is entirely local and on-premise, they aren't paying massive API fees to big tech companies for every single query. They've essentially crushed the operational costs that traditional institutions and even other AI startups always end up passing on to you, the user. This is exactly how they make elite research affordable.
Finally, Section 4, your new financial weapon, take back pricing power.
So for those of you looking to stop trading on delayed, biased information, IanFV is officially launching on May 27th, 2026. You can find them at www.ianfv.com. And according to their launch materials, if you register on day one, you instantly unlock a 50% discount on subscriptions to access all this institutional-grade, independent research.
I'll leave you with this final thought to consider today. You now know how the sausage is made, right? You know how heavily the odds are stacked against you in the traditional system. So the question IanFV is asking is, are you ready to stop playing Wall Street's rigged game? Why continue paying for carefully crafted illusions when the mathematical truth and the actual power to price assets yourself is finally within your reach?